Good afternoon, everybody, and welcome to today's market analysis video. Overall, the markets were slightly negative, just a little bit negative, about 0.4% or so on average, with the exception of the Dow, which was essentially flat. It fared just slightly better on the back of Disney's monster move of about 7.5% or so. So Disney had a great move, and therefore Dow was flat. The rest of the market slightly negative. It appeared that the markets actually wanted to close on the flat side. So if you go to the intraday, you will notice that we gapped down just slightly and then traded sideways most of the day. But about 30 minutes before the close, the ECB made a very interesting announcement. It said that it won't accept Greece's bonds anymore as collateral. So in other words, they said, guess what? You can't have your cake and eat it too. You can't just borrow our precious money against these junk bonds that you have and then think you can't just do a debt swap and do as you please. So now it appears that Greece is in a very strange position. That what they wanted to do was to leave Europe, and of course this restriction by the ECB makes it much harder on their side. However, all we care about are the technicals, and the charts right now are telling us that this drama in Greece is not important. It's essentially a non-event. As a matter of fact, despite being down slightly, the markets were still healthy today. So as expected, we talked about this yesterday, oil was down today. A lot more than I anticipated, but after the last 3 sessions where it went up drastically, oil was down today. But what you need to pay attention to are the percentage moves in oil versus the market. The market is saying here that a drop in oil is also a non-event. Despite oil's drastic move today to the downside, the market still had a good day. In fact, there were some areas where the market was exceptionally good. Apple had yet another all-time high today. We mentioned Disney. Disney ripped it off in big proportions, up over 7.6%. And there were many other areas in the market that were very healthy. For example, the home builders. They did very well today. So overall, there are some mutations going on in the market, and on a technical basis, the market today is basing around that 50 moving day average and also this trend line right here, which has been serving as recent resistance. If we go into the daily chart, what we see is that the market has this purple line right here, which has been serving as a resistance area. If you take the pivot point from the 29th of December and connect it to the pivot of the 22nd of January, you will see that there is a down sloping trend line, and this is the second day that the market has been hitting this trend line. We talked about this in our previous videos. The trend line at the moment is at the 205 area, $205 level, and so what we need to do is we need to get above it. Today the market was telling us that it's not ready for it yet. However, based on all these different factors, currently there is a slight, and I emphasize slight, bias towards the bullish side. So we've had this sort of a semi-triangular pattern right here, and it has been building cause to go higher. That is one scenario, and of course if the bearish side plays out and this pattern fails, we will have to see some sort of volatility come back into the markets very soon. So if you are a bear, you want to see a wide range bar coming into the market very soon, potentially taking out yesterday's low right here, which is around the 202.50-ish area. So if you are a bear, you want to see a red candle, a big wide range bar. Otherwise, this is looking like it's building cause for a bullish case. Again, some rotation going on here. The tech sector doing very well as of now. We seem to be getting some factors in the tech sector every day. It's something that is showing us some strength there. Today, again, Apple putting in yet another all-time high, and At this point, the market is telling us it's okay. There are certain parts of the market that are doing bad, such as oil, but there are others that are making up for it. So overall, the market is saying bulls ahead. We are going to see if that becomes true. Of course, we still have to see a break to the upside. Right now, the problem with the bulls is that trend line right here. So if we can base sideways for a couple more days, there is a greater chance for this trend line to be broken and we should see some upside. And then if that happens, the next area of resistance is 206.33. So write that one down. However, if this pattern fails and the bearish side takes over, we're going to see some sort of fast and furious move to the downside, potentially, and again I emphasize potentially, even breaking this area right here and going down to 194 to 190.